The following is a presentation of TFNN.
This story began on a nice Florida winter day, December 10th, 2005, when lone fishermen in Mosquito Lagoon, out near Cape Canaveral, discovered a crab trap that appeared to have something caught inside of it. As the fisherman looked closer, he noticed that a baby dolphin was tangled in a rope that had cut off the supply of blood to the dolphin's tail. The fisherman cut the rope and called for help because he saw this dolphin was struggling. The dolphin, later named Winter, was brought to the Clearwater Marine Aquarium, but too much damage was done to her tail, and it could not be saved. Now, folks, the greatest gift you can give anyone is the gift of your attention, and that is exactly what Winter received from a group of prosthetic engineers who created an innovative new design for a prosthetic tail. Winter, she's doing just fine, and her story of survival and success has gone on to touch others, many, many others. These are folks that need a more flexible prosthetic. We can't control the circumstances of life, folks, only how we respond to them. Circumstances are like the wind. Learn to set a good sail, folks, and let the wind take you to your dreams, your treasures, and your destination. Welcome to TFNN. We're glad you're here and you have our attention.
It is now time for The Trader's Edge. Now, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the May 24th, fantastic Friday edition of today's Opening Bell on The Trader's Edge. I'm your host, Steve Rhodes, and folks, I absolutely treasure your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with tools that, well, just simply tools that help each of us in order to lead an inspired life, because certainly it is my belief that leading an inspired life is what it's all about. So let's go look at one of our tools. This is the tool I call never forget the meaning of Memorial Day. You know, folks, I don't have to tell you how fragile this precious gift of freedom is. Each time we hear, we watch, or read the news, we are reminded that liberty is a rare commodity in this world. You know, the United States and the freedom for which it stands, the freedom for which men and women have died, must endure and prosper. Their lives remind us that freedom is not bought cheaply. It has costs. It imposes a burden. And just as they, whom we commemorate this weekend, were willing to sacrifice, so too must we. In a less final, less heroic way, but we must be willing to give of ourselves each and every day. This weekend, this coming Monday, the United States stands as a beacon of liberty and a democratic strength before the world. We must be resolved to stand firm against those who would destroy the freedoms that you and I cherish. We must be determined to achieve an enduring peace. A peace, folks, with liberty, and a peace with honor. Our determination, yours and mine, our determination, our resolve is the highest tribute that we can pay to the many who have fallen in service to our nation. We owe this freedom, folks. We owe this freedom of choice and action to those men and women in uniform who have served this nation and its interests in its time of need. In particular, folks, we are forever indebted to those who have given their lives that, well, just simply, they have given their lives so that we can enjoy these freedoms. I can't claim to know the words of all the national anthems in the world, but I do know, or I don't know, quite frankly, of any other that ends with a question and a challenge like ours does. Does that flag still wave over the land of the free and the home of the brave? Folks, this is a question, and you know what I think about questions? They control our focus. And so this is a question that we must always ask of ourselves. Freedom, folks, freedom is never more than one generation away from extinction. We do not pass it to our children in their bloodstream. It must be fought for. It must be protected and handed to our children so that they can do the same to their children. Or one day we'll spend our sunset years telling our children or our children's children what it was like once in the United States where men and women were free. Folks, it is Memorial Day weekend, and a time to remember just how proud each of us should be to be an American, and just how proud we should be to fight for one another. Enjoy your Memorial Day weekend, folks, and I'll pass on something to you that I do. And if you want to feel great, this is what you should do. When you walk into a restaurant, because I know each of you go out to restaurants. When you walk into a restaurant, here's what I want you to do. And I want you to do it from this day forward. I do it every day of my life. The very first thing I do when I walk into a restaurant is I scan the restaurant and I look for somebody that's in uniform. If I see someone in uniform, I immediately go find the manager. And I find that manager and I tell them to bring that bill to me. Bring that bill to me. Do not tell them that I'm the one paying for that. Just bring me that bill. Go do that, folks. Go find someone of service. It is a great way to pay tribute for somebody that, quite frankly, is risking their lives for the freedom that you and I get the benefit of each and every day. Happy Memorial Day weekend, folks. Make sure it's a safe one. And be out there and just simply do everything you can protect. Do everything you can do to protect the men and women in this country. Let's go take a look at these markets out here. Right now, we've got the Dow futures off about 56 points, trading out at 15,233. S&P futures down about 10, trading at 1640. NASDAQ futures off 16 at 29.75. Russell 2000 down 6. U.S. dollar, it's off about 9 ticks. No big deal out there. Futures are the currency market here. We've seen a bit of a movement in the Japanese yen. We'll take a look at that. Gold trading off $3 out at 13.88. Silver down 13 pennies at 22.37. Light sweet crude off $1.10 this morning, trading out at 93.14. If we take a look across the pond out here, we take a look across the pond right now over in Europe. We've got the DAX off 47, the FTSE down 41. Over in Asia last night, you had the Hang Seng down 51 points. Not really a big deal there. That was off 0.25%. You had the Nikkei up almost 1 full percentage at 128, but that really wasn't the big story in the Nikkei. We'll take a look at that chart pattern out there. The Shanghai was up 13 points. Our call-in number is 877-927-6648. Give us a call, folks. We can take a look at your stock, your chart, whatever it is that you'd like to talk about. Be happy to hear from you. Let's go take a look at the S&P futures. Let's go see what is going on in the marketplace here right now. We know where the bulls are hanging out. It's the same place that they were hanging out yesterday morning as we took a look at the ES Mini, as the market did seem like, as the roof was caving in, as the world was crumbling, as futures were down. The Dow was down about 140 points or so out there. But when we take a look at the EKG of the marketplace, it's very easy for us to identify where the bulls are going to be defending their position, where the bears are going to be defending their position. In the case of the bulls, it's the same place today that it was yesterday. It's these two Morningstar reversal candles. So that says at the 5 a.m. low, 1632.75. You can see the market here was in an oversold condition. That just simply means it had to work its way off by either moving sideways or bouncing up. And we saw that it bounced up to the area that we had projected right around that 1653 range out there. And then just simply overnight, just simply moved sideways. Could have moved higher. It did move higher. That should make you say, something to think about. Now, as the morning session begins out here, 7:30 this morning, you had the ES Mini get down to 1638.75 right now. In this half-hour session, we've been down to 1639.25. We've got two Morningstar reversal candles. That first one, the low of 5 a.m., we had another one that came in here that was confirmed at 10:30 yesterday morning. So that says support here really is going to be that first one out at the 1634 level. If that gives way, look for support down right at about the 1626 area. That's just simply the dead cat bounce, the 0.382 retracement from the low here. And the low I'm referring to is the one that came in on April 18th when this rising price channel that the ES Mini broke through began. That low out there is right around the 1533 mark, came in at 2:30 in the afternoon on April the 18th out here. So what can you expect? It's going to be a light volume trading session out here. So a market that ends flat, or maybe it's a little up, maybe it's a little bit down here. Not a lot to really be read from the market today. The bears do have control of the ball. The ball has been shifted. The bulls, they fumbled the ball. They fumbled it on the goal line on Wednesday. We had that nice big key reversal day. But more important than that, we had the McClellan summation oscillator dip below zero. That gave possession of the game ball to the Bears out here. And yesterday just simply was some additional follow-through in the marketplace. So I had a request to go take a look at the New York Stock Exchange. So let's go over and we'll do that. I didn't get a chance to do that during Tom's show. I was fortunate enough to fill in for Tom during the 5 to 6 o'clock hour. And if we take a look here at the New York Stock Exchange, let's take a look and see what it has done. Number one, all the indexes across the board had that key reversal day. I've described to you, exactly what that is. And in the case of the New York Stock Exchange, and again, it's just simply where the current session, or in this case here, Wednesday's session, the high and low exceeded the high and low of the prior day. It has to come in an extended condition. If we just simply utilize our relative strength, the relative weakness indicator, that most certainly occurred. It can be because of an A to B equals CD. Maybe it's a butterfly expansion. But the market's all in the extended, in the overbought territory, so that's an extended condition. And then the market must close in the direction that it was not coming from. So this would be a lower close, and that's exactly what we had on May 22nd, 2 trading sessions ago. And to boot, it was a bearish engulfing candle out there. So you got a little bit of everything. It wasn't just that it reversed and it moved in the other direction. You had a bearish engulfing candle. Do all key reversal sessions have to work? No. Did it work on November 16th? Absolutely. Yesterday, did we have some follow-through? Most definitely. Just because it's a green candle on my chart, that does not mean that it's a bullish candle. In fact, if you were to call that a bullish candle, that's the least bullish possible candle of all. Wasn't really a bullish candle. So it doesn't matter that it was green out there. We had to move lower. Now, what stopped the New York Stock Exchange? Well, that blue line, that horizontal line going across my screen out there, that just simply happens to be a primary trading range, a boundary line. I expect we'll see the New York Stock Exchange get below that level. Where will the New York Stock Exchange run down to? Well, I think I gave you a figure, but I'm going to give it to you last night, but let me do it to you again. The first place that we just need to go is really take a look at what was the 200-day EMA on April the 30th. And the 200-day exponential moving average was 85.84. 85.84 is where the New York Stock Exchange wants to run down to. Now, 85.84, let's just kind of keep that in our minds out here. And 85.84, if we take a look at this, and I'm going to pull this back here just a bit, take a look at this rising price channel. This rising price channel is the one that goes all the way back into 2011. So this is really starting from the October lows in 2011, October 4th, 2011. 85.84, by the time it gets down into that area, is likely going to be a test, maybe a test here of this rising price channel. So it only makes sense that it's made it all the way, the New York Stock Exchange, that is, has made its way all the way to the top. Now it will make its way all the way to the bottom, maybe a little bit lower than that. And that is where the New York Stock Exchange wants to run to. Is it going to run there overnight? Absolutely not. But is it going to do it sometime between now and the end of October? Absolutely. Without question, without hesitation. That's what the New York Stock Exchange is going to do. Now, how is that going to affect maybe your longer-term holdings out there? You should manage your long-term, your intermediate-term, your short-term, your ultra-short-term a little bit differently. You should be paying attention to those charts each. That means you would look at the, you're not invested necessarily in the New York Stock Exchange. Maybe it's the Dow, which, by the way, that oscillator turned below zero yesterday as well. The fumble inside only 30 stocks out there, the Dow 30. 877-927-6648. We'll be right back.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. with the launch of TigerTV. TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Let's go take a look at the Nikkei out here, because there is trouble in River City. Now, the Nikkei, cool thing about the Nikkei, about any chart really, doesn't matter what you are trading. Doesn't matter where in the world you're trading. If you take a look at the charts, you're going to find patterns. In fact, you can just simply blank out the name of what it is that you are trading. Sometimes it's better just to even do that and just take a look at the chart. Now, what I've got on my screen here, for those of you that are watching us on Tiger TV, maybe you're listening on the radio, your mobile device at TFNN.mobi, and, thank you so much for doing that. Remember, we do stream these shows live to your smartphone devices, so if you go to the homepage of TFNN.com, over on the right-hand side, you'll see that button, 3 little smartphones on it. Click on that. This show will stream live, and, you can always catch the replay of this, the archive, on Channel 9. Now, we're looking here at the Nikkei at the 10-minute chart out here, and we're starting from the swing point high, the high that was put in here, which came in at about, I'm on East Coast time, so 21, that would be, 9:10 in the evening, right at the level of about 15,942.60 out here. That's your A point of an A to B equals CD down. Excuse me, let me just go ahead and now broaden this out a bit. So makes a B line down, makes a B point, forms a B point that I've chosen here, which is down at 12:30 in the evening on May 23rd. Gets down to 14,945.56. Makes a retracement up, and it's really just a 2-bar retracement or a 1-bar retracement, if you will. Gets back at the 12:40 time frame. gets up to a high of 15,285.75. Now, just take your retracement ruler, go from your A to your B, see what kind of retracement you get there. The kind of retracement we get is a dead cat bounce, a 0.382 retracement, just like we actually saw inside the ES Mini yesterday after the move down. So it is important to be paying attention to those retracements out there. Now, 0.382 retracement, is it any wonder that the Nikkei did more than a 1-to-1 A to B equals CD? In fact, let me just change this up a bit here. A 1-to-1 A to B equals CD would have been 14,289 out here, but no bulls were in place as that D point was being made. They showed up at the 1 to 1.272 level. That 0.382 retracement, that really told us to be looking for more than a 1-to-1 retracement out there. What happens at the level of the 1 to 1.272, which the number came out to 14,017. You actually had the Nikkei last night at about 10 to 1 in the morning, get down to a level of 13,981 versus 14,060. So remember, you're always using these numbers here as guidelines, these A to B equals CD patterns, these retracement levels. They're your guidelines out here. Then it's a matter of understanding where the bulls and the bears are. When you see that take place, then you know where the line has been drawn in the sand, where the battles are being formed. And that's all that this is about. That's all that this game is about, is understanding where those battles are so that you can then take your positions. It's like racing a car. You know, you can just wait out there and you can draft the person who's in the lead. You can use less energy by drafting someone, by ducking behind him, and then as you get to that last lap out there, you know, try to overtake that individual. In this case here, we had a hammer candle. This was a 10 o'clock session here. We had a hammer candle that did show up. You can see that hammer candle that was formed. That set up the lows for the morning inside the Nikkei. Then it just simply went ahead and it closed a bit higher, closed out at 14,612. Now, if we go take a look at, so that was what was going on the daily chart. And you can see the open right here. Here's where the open was. It came in at price level of, 14,731. Now, if we go take a look here at the daily chart shows you what? It shows you a bearish engulfing of magnitude. Not only was it a key reversal day inside the Nikkei, it was a bearish engulfing that went ahead and took back all the sessions through April the 10th out here. Today's April the 24th. So it took back a number of sessions out here, and yesterday was actually a push lower. Now, I don't have the volumes. I know that the volume off of the top here, and the Nikkei will be back up there because it was a volume day, but it was also pushing lower out there. So that high, the Nikkei will be back up there. But it first wants to go ahead and recharge its batteries. It wants to move lower. 13,145, that's just a dead cat bounce. That is at a minimum of what we should see inside the Nikkei. More than likely, it'll get down to about that 11,416 area, and that will bleed through across the world as the Nikkei. But, you know, you trade our markets that we're in here, but the Nikkei clearly showing that it has problems out there. So you don't necessarily have to pay attention to the mere fact that the Nikkei was up 128 points, was up almost almost 1% last night. Instead, you really have to make sure that you're looking at the charts, looking at the chart patterns that are out there, and the Nikkei showing that it, too, has some weakness. That being said, well, you got the same thing going on inside the currency market. If we go take a look, well, we'll have to take a look at the yen here. We'll try to do that during one of the next two segments. When we get back, though, we're going to see what's going to pop and drop. Well, I can tell you dropping. Dean Foods, Sears Holding, Abercrombie & Fitch, Salesforce Innovation, Titan Machinery. To the upside, Pandora Media, Procter & Gamble, Inter Oil Corp. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. The Art of Timing the Trade charts has officially launched at TFNN. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, The Art of Timing the Trade charts allows you to scan for Fibonacci formation setups, including Gartley's, butterflies, ABCs, and much more. The Art of Timing the Trade charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
To the races. We got the Dow up 37 points, trading out at 15,257. S&P's down 8 at 1642. Composite down 17 points this morning at 3442. Russell 2000 off 5 at 978. Google down almost $6 here. Apple up 2. Microsoft down 17 ticks. Intel off 7. Cisco is flat. Leading the charge to the upside is Interoil Corp. IOC up $8.48, up a little over 8% this morning. Procter & Gamble having a little bounce here, change in the CEO and chairman. PG is the ticker symbol. They're up 4% this morning, up $3.35. Infoblox, BLOX, is the ticker symbol. They're up 14% this morning, up $3.17. Infoblox, let's see here. What do they report? They reported revenue of $58 million versus $43 and a net loss of $0.3 versus $1 million the year before. Infoblox is they develop, market, and sell automated network control solutions worldwide out there. So they're having a nice little bump. We'll take a look at that stock chart. Pandora Media up 10% this morning, up $1.70. As I recall, we'll look at that chart. We looked at it last night. I think that's going to run into some resistance out here. Big downdraft. Tesla Motors up 97 cents right now. First Solar up $1.20. Solar City up $1.47. Baidu up 84 cents out here. That's to the upside. To the downside, Sears Holdings down 17%. I imagine they're going to be down with volume this morning, off $10 and change. Dean Foods off, 40%? What is going on here? Let's see what's behind this move here. Dean Foods, DF is the ticker symbol. They completed a spin-off. Okay, so they completed a spin-off, so that's what's behind that move. That's a little 40% hit, so we won't pay as much attention to that. Google up $6. Nordson Corp, NDSN, off 8%, down $5. Abercrombie and Fitch, ANF, off $4. That's 7% to the downside. Titan Machinery off 12% this morning. Salesforce Innovation down 5%. That's $2 and change. Foot Locker also out with numbers. FL is their ticker symbol. Let's see what they reported out here. They generated revenues or net income of $138 million versus $128, and revenues of $1.64 versus $1.04. Nice job on the revenue beat. That was Q1 sales. So, and their comparable same-store sales were up 5%. But the market is not digging something that they've got out there. That is on FL. Foot Locker down 6% this morning. So much for doing a great job. Williams and Sonoma right now trading off about 3%. That is down 2%. Our call number 877-927-6648. Let's go take a look at some of these equities out here. Let's start off. We got Williams and Sonoma. That is in the upper right left-hand corner of my chart here. Had a caller last evening. He was looking for a good entry point on Williams and Sonoma. One of the things that we did, we looked at the weekly chart out here. On the weekly chart, Williams and Sonoma actually has, now this is coming back off of the lows in 2008 out here. Your B point, though, was crossed with conviction. That B point was May 13th. 6.4 million shares. The high, 45.48 out there. And that B point was crossed with more volume. That sets up at least a 1-to-1 A to B equals CD, which would take you to 69.12. Now, what we also noticed in taking a look at Williams and Sonoma is this thing traveled real well with regard to the direction of the general markets. We just simply overlaid the S&P 500 on it. Therefore, if the general markets are going to pull back, so should Williams and Sonoma. And what we looked at is really the last line of defense, or not last line of defense, but a line of defense that when it was broken through, old resistance becomes new support. It's pretty simple. All you have to do is identify those areas. We did that by identifying where the bears were hanging out. Well, the bears showed up inside Williams and Sonoma on the November 9th week candle. This is a weekly chart, by forming a bearish engulfing. That sets up the resistance level. In this case here would have been the high of the candle that engulfed, or the candle itself, whichever was higher. In this case here, the high was November the 2nd out there. The prior week's candle, that was at 48.07. That set up your first resistance area. We had bears show up in this equity, the bearish engulfing candle on January the 18th, the week of January 18th, as well as the week of February 22nd, 2013. So a nice line of old resistance that now should become support. And so the buy on Williams and Sonoma, quite frankly, it'd be nice because it would potentially pull back, wouldn't even get back below that B point for Williams and Sonoma, would be in about that 48.07-ish range out there. Volume so far today is telling you wants to also pull back there. Well, for the week, I should say. For the week here already, it's done 5.1 million shares. Let's go take a look at the day's volume, see what we have moving into it. I guess so far not too bad, only 213,000 shares. Now, also in that area, what's nice about the area that we took a look at as a pullback is really where you had a nice big breakout on Williams and Sonoma. On the daily chart, that is March 20th, 8.7 million shares on that day. The high is 50.49. The low is 47.67. So that's an area where it should find nice support if it can go ahead and pull back to that area. That was Williams and Sonoma, their ticker symbol, WSM. Let's look at Sears Holdings. SHLD out here. If we take a look at that, this is gapping down with volume. You know, we identified the high volume, or I'm identifying for you the high volume low bar out here, and that is the January 8th area. We saw that what Sears Holdings did was it got back into the area where it broke down. Where it broke down was the trading session on November the 15th, 2012. That high was 59.28. 820,000 shares were done on that day, and then the very next day, 6.6 million shares to the downside. So all that Sears Holdings did on its move up was it moved back up to where it had broken down. Gave this little shooting star. That is the opposite of the hammer. That comes at highs out here, and so we know that that is a significant area. That was formed on May the 15th. The high was 60.72. The volume was 1.2 million shares. And what happened was, formed a little dark cloud cover as that area was tested. Let's see if it got over the high. The high was 60.72. The session here was 60.74. It most certainly did. So May 22nd, it even takes out. So you know you're coming into an area where it broke down. You have a bearish candle signal out here. See, the body of the candle, remember early on I said, hey, just because a body is green doesn't necessarily mean that it's a bullish candle. In fact, just the opposite. In this case here, we had a shooting star candle out here, the opposite of the brother of the hammer out here. And that also was tested with lighter volume on May 22nd. So just 2 trading sessions ago with 833,000 shares versus 1.2, and of course all of that going against 6.6 million shares. So is it any wonder that Sears is gapping down this morning as it got back to an area where it had recently broken down? You want to sell those breakdowns, you want to buy those breakouts out here. In the case of Sears Holding, you've got nice volume so far this morning to the downside, 1.6 million shares. That's going to go into this high volume low out here from January 8th. That only has 5.1 million shares. The top of that candle is 43.78. I suspect we'll see Sears Holdings try to get into that level even today on a light volume trading session. We'll see but that's where it's headed. Whether it gets there today or not is a whole different matter out here. So that is on Sears Holdings, SHLD. Let's go take a look at Salesforce Innovation. That opened up down this morning. It's fighting its way back here. So far, let's see, what did they actually report out here? CRM is the ticker symbol. So let's go see what their numbers were. They reported they generated revenues of $892 million versus $695. So a nice job on the top line. A net loss, though, of $672 million versus basically flat or zero the year before that. So these guys must be spending a lot of time trying to buy market share. Looks to me like where Salesforce Innovation wants to head down to is its last swing point low out here. Again, CRM is the ticker symbol that we're taking a look at. And that swing point low coming in on April the 19th out here. That low is at about 39.75, 8.7 million shares down there. What should hold that area as resistance is this high volume breakout from November 21st. You can see that there was volume of 27.9 million shares. And the top of that bar is 39.77. It also had a nice breakout session here with 26 million shares on March the 1st, but you're traveling really just slightly below that level. That's 42.70. You're at 42.72 right now, so you're really right at that area. So if that fails, it says, yeah, let's go test the top of the November 21st area, which would also be the bottom of the April 19th area inside Salesforce Innovation. You close below the level of 39.75, and you start doing it with more than 8.7 million shares. What will happen is Salesforce will come all the way back to its last breakout area. That's going to be at least the low of November 21st, 37.45, and potentially even lower than that, maybe even run into the swing points from November 13th of 2012 out there. That is on CRM, Salesforce Innovation. Let's go see what else we got. We got ARO is the ticker symbol. Which one is that? ARO. That's not Abercrombie and Fitch. That is what is it? Let me look it up here because I somehow seem to have forgotten what ARO. I know what it is here. Aeropostale. There you go. Thank you. So we're taking a look at Aeropostale. If that's how you pronounce it. This thing gapping down this morning. Volume behind the move, 538,000 shares. It's coming into an area where it had recently broke out, but only broke out with 5.4 million shares, already down with 540,000 shares. So coming down with a bit too much volume. That says that what Aeropostale wants to do is actually come all the way down to this high volume low bar from January 10th, 2013. That'll give you a price range of anywhere from the low of 11.91 to the high of 13.33. That's got 16 million shares down there. The low has not been tested, so if this continues with volume on a lightened trading session, that says that Aeropostale, ARO, wants to head all the way down to that swing point low. Aeropostale is the one that has not even made it up to the area where it broke down, and it broke down big time August the 2nd with 14 million shares to the downside. Let's go see what is up next here. We got Pandora Media. Pandora Media gapped up this morning. Now, I don't. They did not make any revenue. They did not. Actually, they made revenue out here. They just simply did not make any income. It's a great service, no question. These days, you got the way that the internet, the way that it is so easy for you to get access, whether it's on a television, a receiver you buy, the cable. I mean, it's everywhere. It's with us. It certainly is. And Pandora Media, if you want to just create your own radio station, I mean, what a great idea. Now the question is, whether or not they'll be able to really monetize it, what's going to make them unique amongst other players out there. This thing did have a IPO that took us back into the June of 2011 timeframe, June 15th. It had made a high that session of $26. So those folks who bought it at $26, or maybe they bought it, went from this wide price spread, went from $26 down to $17.35. Of course, that wasn't the low, because the low was finally put in here all the way down on November 16, 2012 at about $7.08. Our man David White, I do remember him talking about this equity and just saying, come on, folks. This doesn't even did not make a whole lot of fundamental sense to him, because what was unique about what Pandora, great service and all, but what was unique about what it was that they were providing? And folks, if you have not had a chance, it is Memorial Day weekend. That means May is running out of time here. And what you want to do is you want to go to the homepage of TFNN.com. A couple times a year, we run a Tiger Dollar promotion. It's an opportunity for you to be able to have your money make money. Well, that means that, whatever you want to invest in yourself by buying Tiger Dollars, we're going to go ahead and give you a 20% bonus. On top of that, Tom's going to make a contribution to you, 5 to 10%, anywhere between $500 and $999. It's going to be a 5% additional contribution, tax-deductible contribution to you, or on your behalf, to the one fund. Anything over $1,000 is a 10% contribution on behalf of you to the one fund as well. So go to the homepage at TFNN.com and take advantage of that. In addition, Tom is committed to giving you 6 hours of training for free. It comes with that for anybody who signs up for Tiger Dollars out here. So, talk about great value. It doesn't get any better than that, other than the art of the chart software out here that Tom and David put together. Now, if you haven't had a chance to check that out, this weekend, great time for you to sit around, maybe a laptop on your lap, maybe it's a pad on your lap, maybe it's at your desktop, a nice comfy chair out there, and go over to the homepage of TFNN.com and check out all the great videos that David has put together on the art of the chart software package out there. It is an incredible piece of software. It doesn't matter really what level you're at. If you are just new to trading, you're saying, what? I want to understand this technical trading better, and you're looking for a charting software to help you to do that. This is the package. I mean, it truly is. It covers all of what Tom teaches in the art of timing the trade out there. And look, that's a book you want to make sure that you've got inside your library out here. So check out all those great things on the homepage at TFNN.com. And if you're so inclined, go ahead and check out my newsletter service, Mastering Probability. You can do that, 30-day unconditional money-back guarantee. So a lot of great ways for you to invest in yourself out here. Speaking of investing, though, let's go back. Let's take a look at trading and investing. Let's look at Pandora Media. Pandora Media does have a confirmed A to B equals CD up out here. That B point was crossed with volume, which was March the 8th, had 37 million shares, and that was taken out with, let me see here, was it? 37 million shares. No, it does not have a confirmed A to B equals CD up. What am I smoking here? Absolutely nothing. So it does not have a confirmed A to B equals CD up. This thing here, it did gap up so far this morning, 6.8 million shares, taking over the swing point from yesterday of 14 million shares. So this could move up to the $20.27 range. Right now, we've got the Dow is off 57, S&P is off 9. It is a Memorial Day weekend coming up, folks. I want you to have a safe one, but go take care of somebody. Go find a way to pay for a dinner of somebody in a uniform. Go seek them out. We'll be right back.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Welcome back, folks. The Dow's off 65 points right now. S&P is down 10 at 1640. You know, the number you want to be watching for on the S&P is at 1650 level. Let's go ahead and pull up the actual daily index chart here on the S&P 500. That 1650 level is a key level. It is that primary trading range boundary that the S&P got above. Let's pull this back here. Well, as soon as I can find the chart on my screen out here. Let's pull this back. Give me a moment here to do this, and we can we'll take a look at the weekly as well. But that 1650 area, you know, when you get above one primary trading range boundary, what happens is it acts like a little elevator out there. Says it can go up to the next floor. In this case here on the S&P 500, that could have been the 1750 level because it's traveling in 100-point increments on this chart here. I don't have the next top level out there. So it closed back below 1650. In fact, let me just switch over to a different tab on my screen here. Just bear with me for a moment. This will allow us to go easily take a look at the daily, the weekly. So I've got the daily up on my screen here right now, and you can see here that when we take a look at, let me get rid of this retracement level here. So 1650, a close below that this week says, okay, now you're back down into the bottom portion of the primary trading range boundary line. That says, hey, coming back down to 1550 and testing that area. In fact, remember the breakout, I believe that was, 1576.09. That is certainly really game out here. But again, if we go back and we take a look at April 30th and take a look at the 200-day exponential moving average, that happens to be 1470. That is where, during the next 6 months, during this unfavorable cycle that we are in, and, they call it sell in May, but it's really not so much sell in May. It's really the beginning of the unfavorable selling season out here. And so, and it's not, and folks, it's only I think it was like an 11, 12, 13% correction. That's what we're certainly going to, now that's the minimum. I'll just give you, that's the target level, which is that 200-day exponential moving average. I'm going to go ahead and I'm going to put together a special report, all kinds of charts. Maybe I'll even do a workshop, and it'll include this and some other trading secrets out there. So I'll work on that. It'll take me a week or so, and but that way it'll be something that you can have in your arsenal, forever. So it'll be something of great value. It'll take me a week or two to get done, and I'm sure that we'll make that available sometime in the middle of June or something like that. But in any event, we can still take a look at the charts and see what they're doing. So that 1650 level is key for sure. If we switch over and take a look at the weekly chart here right now, on the weekly chart, what would also be interesting is if in fact the market closes if somehow intraday, if we were to see a spike down to 1626.74, and it's only 20 points away. I don't necessarily expect that, but if that were to happen out here, then what we would see on a weekly basis is you would see a key reversal weekly session out here. But that's not necessarily my expectation for the day, but it is something to pay attention to. What really all that we're looking for here on the weekly basis is just simply the mere fact that you close back below the 1650 level. Hey, if you don't close below 1650, it says game could be on to go back up and test the highs of last week. But the Bears clearly have the ball here, and it doesn't look to me like they're necessarily going to fumble today. Again, on a holiday trading session, it would not be unusual for the market to finish kind of flat, maybe even a little bit up on a light volume trading session out here. So that's really my expectation. If it closes lower, it actually just simply sends more of a negative message than anything else. Folks, have a terrific Memorial Day weekend out there. Do something for some of our men and women in service. Just do something, folks. Buy them a drink, buy them a meal, say a prayer at a minimum. And I'll look forward to seeing you on Tuesday morning, folks. Have a great weekend, and we'll see you soon. Bye-bye now.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.